Okay, we are live, and it is 1 o'clock. Let's get going. Let me start recording here. All right, I don't see Colonel Fred in here yet, but I see Dennis Blitz in here, and we got his smiling face in here from Chicago. Let me bring our slides up here as well, so we have them.
Aaron, just want to make sure you're live. I don't see us live on our end.
It should be live right now. I'm showing that it's live right now.
I don't see it on our end. Can you confirm with Fred, please? The live stream?
It might be on a 30-second delay.
No, it's more than that.
You are live.
While we're talking, Aaron,
Please go ahead.
both Aaron.
Do you have it, Ramesh?
Give me 1 second. I'm going to reboot it up.
All right, we're recording, so just go ahead and give me a thumbs up.
Okay. While we're talking, Aaron, both Ramesh and I have a hard stop at the end of this, at the end of the hour.
Oh.
We're right into something.
We got Colonel Fred on there. No problem, man. We're good to go.
There you go. Go ahead, please.
Good deal.
All right, you with us, Colonel Fred?
Got you guys.
Here we go. Hello, Fred.
With us, Colonel Fred? Oh,
All right.
wait a minute. That's feedback from yours, I think, Fred.
Nope, none from, shouldn't be any from me.
That was weird. Okay, I think we got everyone. All right, I can see you guys both. You can see the screen. All right, that's not bad. 1 minute in, we figured out the technology. So we have Fred with us, who's going to be joining the presentation today. My name's Aaron Adams. Dennis Blitz is with us from Chicago. We're thrilled you decided to join us for the next hour. We're going to be talking about active and passive investing. We have a really great opportunity for you today to take action on. And our goal over the next hour is to discuss active investing in real estate, passive investing in real estate. We're going to talk about what's happening in the real estate market nationally as it relates to COVID, what the opportunities that we see are, and why you as an investor, whether you're passive focused, active, or a combination of the two, whether there's never been a better time to get started in real estate investing. What we want to do to start off, though, is we want to describe for you the trainings that we've already provided as part of your package. And so quickly I want to go to, because we've already given you a couple gifts, and the first one is at aaronadamstraining.com, so I'm just going to go to that right now. And when you received an email from us, you actually received that from Fred. And the first class that we gave you 2 3-hour trainings as part of the introductory package. So I want to make sure you understand what those are and where they are. The first one we gave you is called Real Estate 101. You can see it's a $1,000 class. It's $99 discounted on the website. We gave that to you for free. You should have a link to be able to watch that. This class I taught with my business partner, Travis Howard. And it's about 3 hours. What we did with this class was, Travis is my partner, my business partner. He and I run our Charlotte operation together. And what we did with the class was, for 3 hours, we covered all of the kind of hot topics that are out there in real estate. We talked about flipping, we talked about wholesaling, we talked about no money down deals, we talked about commercial, Airbnb, mobile home, we talked about construction. You know, kind of covered some topics that beginning investors are usually interested in moving forward on. And then we kind of give you the pros and cons for each one. So, for example, wholesaling is the process by where you find a seller who's looking to get rid of their property that's not listed anywhere. You get it under contract and you flip it to an investor like me who wants to buy property. Wholesaling is a great way for investors to get into investing with very little money down, and it's a good way to start learning markets and learning how to find investors. So in the wholesaling class, we teach you how to do the marketing. Many of you have seen those We Buy Houses signs. Maybe you own property. You've received a postcard or a letter in the mail by somebody who says, I have cash, I want to buy your property. And so in the wholesaling training, it's about 3 hours. We teach you how to find sellers that are motivated, looking to get rid of their property that haven't listed it. So we teach you how to find off-market deals. Then we show you the process where you can get those deals under contract. Then we teach you how to find in your hometown an investor like me, an investor who's looking to buy property. And so wholesaling is one strategy that we walk through in the Real Estate 101 training, pros and cons. Flipping, many of you have seen the flipping shows. Multifamily apartment complexes and commercial property, we talk about that. And so it's a great starting point if you're just getting into real estate. And you have the link to that in the email that we sent. It's a 3-hour class that you have absolutely free. So we're excited to offer that to you. That's the first thing. Now, the second class that we also sent you a link for is this IRA 101 training. And Dennis Blitz, who's with me on the call today, he and I taught that training. Dennis, what did we cover in the 3 hours in the IRA 101 training?
My, we did an awful lot. Basically, what we want people to understand is that if you have an IRA or maybe an old 401k or an old retirement plan from a former employer, those dollars can be used to make almost any investment you like. You know, most people think they can only buy stocks, bonds, mutual funds, when indeed you can make any investment. So if you are interested in real estate, you could buy real estate with that money, and all the earnings from that real estate property, all from that transaction, would go back to your IRA, would be 100% tax deferred or 100% tax free, pardon me, depending on how you set it up. And it really is a check of the box, and we'll help you set it up so that it's tax free. So IRA investing, self-directed IRA investing allows you to make almost any investment you want. And we talk about that in detail on that tape. But we also talk about how your IRA can partner. Maybe you find an investment that is, I'll make the numbers simple, a $100,000 investment, but gee, my IRA only has $80,000. I can't make that investment. Well, we talk about how you can make the investment. Maybe your IRA would partner. Maybe your spouse has an IRA that's got $20,000. Maybe your friend has an IRA, or your brother has an IRA, or your buddy has an IRA that's got $20,000. And we talk about how to partner an IRA so that your IRA can make bigger investments than it could afford on its own. We talk about that. We talk about how to select a beneficiary. We talk about so many things in those 3 hours. The key thing, though, is you can invest income tax free in almost anything you want. And that's what you want to know, because taxes are so costly. We want to be sure we keep those down as low as possible.
Yeah, so under the passive investing umbrella, we put this IRA 101 training together because most people think that the only thing they can really invest their IRA or their 401k in is stocks, mutual funds, index funds, or keep it in cash, because most people are coming from a Fidelity type investment background. So today we're going to talk about self-directed IRAs. We're going to break down what Dennis and his company do. And in that IRA 101 training that we've already given you as part of the introductory package that we have, we spend 3 hours walking through the specifics of how that process works, how your IRA can own a piece of property, how your IRA can invest in a business, how your 401k can have an apartment building go on title, and then the rents every month become the growth. Now, Fred, you were part of the IRA 101 training as well. And what aspect did we cover with you on that training?
Yeah, I was in there. I think I was the unicorn that brought Dennis and the IRA Club money from every different type of account. So because I had a traditional IRA that I converted to self-directed, I had worked after I retired from the Army for a couple civilian companies. So I brought 2 separate 401ks, and then from my time in the Army, I also had a thrift savings plan, which is something that most military members and government employees had. So I converted a TSP, a traditional IRA, and 2 401ks all into my self-directed account to begin buying real estate. So yeah, there's a variety of help available with Dennis and his crew there in Chicago. They do a great job walking even a knuckle dragger like me through the process of converting all those funds.
So just before we get into anything very specific today, I just want to highlight for you and make sure that you understand what we've already given you. The IRA 101 training is about a 3-hour class, and it helps you learn how to use your 401k and IRA to invest in alternative investments like real estate or businesses or lend money. And the Real Estate 101 class is a fantastic starter class. Maybe you've been watching the flipping shows and you thought, I kind of want to get into real estate. Maybe you hate your job and you want to fire your boss and you've been thinking, real estate could be a solution for you. Maybe you know someone who's made a lot of money investing in real estate and you think, I'm bright or I'm smarter than them and that's something that I can do. The Real Estate 101 class is the perfect place to kind of help you get started. And it doesn't matter where you live in the country. By us showing you the different pros and cons, you may be like, hey, I'm in the Bay Area. Airbnb could be a good strategy for me. I'm not going to make, I don't have enough money to make any money in commercial or flipping, but maybe Airbnb and mobile home, or maybe wholesaling could be a good strategy for you. And so both of those classes are what we envision to help investors kind of get off the ground. Now, I want to take a few minutes and talk about Dennis and his company, explain my personal background, because Dennis, you were going to say something. You had your hand raised.
I sure was. Pardon me. You mentioned Bay Area, and Bay Area, that whole area, real estate is expensive, and a lot of people may not have enough money in their IRA to invest in real estate in a high price tag area like that. But I will tell you, we have a lot of IRA owners who again become a little creative and say, wait a minute, my IRA can buy parking spaces and rent them out. My IRA can buy garage spaces and rent them out. So IRAs can make any investment that you want in real estate investments, but really almost any investment you want. So don't limit yourself to say, oh, gee, a 4-bedroom, 2.5 bath, in Sausalito is going to be way too expensive. It might be, for my IRA, it might be, but the parking space down the street may be just perfect and a good return, very good return.
Great point.
Hey, Aaron, before you get started again, we've got a couple of questions in the chat.
Great,
Tim asks, where do I find the best lender for rentals? Broker, hard money, or bank? Probably one for that Dennis can address. Dennis, where do you think the best lenders for rentals are? I want to actually turn that over to Aaron, but I will tell you that each one is case sensitive. And I work with banks a lot in my business because we're a trustee. Banks are a funny animal. And what's funny about the banks are you never know when you walk in the front door, are they cash heavy or cash light that day? And that's going to influence the underwriting, the ability of you to get the loan. And so don't, if a bank turns you down, walk across the street to the next one. They could be cash heavy. You just talked to one that was cash light. But I want Aaron to address that. I will tell you in each case, there are advantages, disadvantages. The hard money lenders can be much, much quicker. They can be a little bit higher cost, but speed has its value. Aaron, do you have any additions?
Yeah, absolutely. So, when I 20 years ago when I got started in real estate, one of my biggest concerns is where am I going to get the money? And I was teaching high school, so I had good credit, but I was only making $40,000 a year, so there was no way I was going to qualify for a loan on a $2 million apartment complex. And so the thing to remember with lending is that lending is always a personal relationship. And now if you don't have very good credit or you don't make a lot of money, then I would suggest that you think about flipping. A hard money lender is also called an asset-based lender, and they will lend you money for a project. They'll lend you the money to buy it. They'll lend you the money to fix it up, but it's expensive money. So typically a loan like that, let's say you borrow $100,000 with a hard money lender, they're going to charge you $2,000 or $3,000 in fees up front. And then they'll charge you, sometimes $1,000 a month. That's tough to use a hard money loan for a rental property, unless you're buying a rental that you want to fix it up, raise the rents, and flip it. So maybe you have a 6 to 12 month strategy on a rental property that you want to sell it for more than what you paid. A hard money lender could be good. So hard money loans, you want to think short term, less than 12 months. Traditional lenders, you want to think longer term. Now traditional lending can be tough as well if you don't have credit, if you don't have income. There's two types of loans out there. There's recourse and non-recourse loans. And so what you want to think about is what kind of projects you want to do and what's your strategy and how you're mapping it out. Is it more of an active strategy where you're going to turn the deal or more of a passive strategy? But it's a great question that you're already aware of hard money lenders. The other question they always ask me is, how do I find a hard money lender? Well, Tim, if you live in, for example, let's say you live in Los Angeles. If you go to Google and you search for Los Angeles hard money lenders, then you'll get a whole list of hard money lenders that are regional. And you can see, you see on the map, direct hard money lenders. So I always say that lending is a regional business. So you want to be thinking about lenders that know your market, because let's say you find, a piece of property in Pacific Palisades that's worth $1 million, is you can get it under contract for $600,000. It'll be much easier for hard money go direct, which is just over in Westwood, to evaluate whether or not you really are getting that deal for 60 cents on the dollars. And so lending, it tends to be a very regional kind of business. You want to think about it regionally, and how do you develop the relationships? Because the hard money lender may say, we're going to charge you 12% APR up front and $2,000 or $3,000 in fees. But then once you successfully complete a deal, because it's a personal relationship, you can usually negotiate more favorable terms. So maybe you say, hey, I'll pay 12% this time, but we're going to drop the fees. And so that was something that I did early on, starting in Southern California 20 years ago. As I built relationships with local banks, with lenders, I was able to get better and better terms as I showed my experience, my ability to borrow and stay within the numbers and pay those loans back. So great question, Tim. Chavez asked a question, Dennis, that I think would be good for you. I have a 401k and a pension plan. Can I use it to invest in real estate?
And the answer, of course, on that is on that 401k plan, if it's what we call transferable, if you're able to bring it over to a new account, you can transfer to a new account, 100% yes. This is one of the very, very, very few places where the rule and the reality are a little separate on these things. And that is, the rule is the money in a 401k belongs to the employee. We all agree with that. It's your money. I agree with it, you agree with it, and most importantly, the Department of Labor agrees with it. The money in a 401k is your money. However, the Department of Labor, who kind of gets involved with this, says we will enforce any valid contract. So does the IRS, so we'll enforce any valid contract. So what happens is, very often that 401k that you bought has a contract. That contract was not drafted by the company you are working for. It was drafted by the 401k provider. The 401k provider is aware that if you realize you can move that money anytime while you're employed, and you find a better investment, you're going to leave. You're going to move that money. They make their money taking a little fee from you every month or every day, really. And so they'll add to that contract a little paragraph that says, while you are an active employee, the money cannot be transferred. So that's where the discrepancy is. The rule is clear. The rule is the money in that 401k belongs to you. You can move it anytime you want. However, you may have, if you still work for the company, you may have unknowingly signed a contract that says that money belongs, that money in that plan stays in that plan with that plan as long as you're employed. Once you are no longer an active employee, they have no control over you. You can move it that day. If you leave on Wednesday afternoon, we can move that money. However, you have to ask. So if you are no longer with that employer, yes, 100% is the answer. You can be moved. You can buy real estate or whatever you choose with it. Investment. Number two, though, if you're still with the employer, it's always worth asking if the plan is transferable. Most of them, unfortunately, are not, but some are. They also have a lot of them that have an extra little leniency once you attain the age of 59 and a half. So if you're 59 and a half or over, you'll find some more leniency.
Okay. I've put on the screen, Dennis, your website. It's iraclub.org. And I want to take a couple of minutes and, as a explain what it is that your company does and let you elaborate on it. Dennis and his company, they are the trustee for my IRA. So they're the trustee for thousands of investors. They have hundreds of millions of dollars running through their FDIC insured trust account every month. And I have on the screen, it says, take control of the self-directed IRA from Dennis's website. Most investors don't utilize a self-directed IRA. Most investors have a managed IRAs. So many of you have money with, for example, Fidelity. If you look at the $20+ trillion in retirement money that Americans have out there, Fidelity manages a third of They have over $7 trillion under management. They're the elephant in the living room. They're the big company that manages. Many of you might have a Fidelity managing your account. What a lot of investors will do is, whether it's a 401k at your current job or an IRA, only 3% of investors self-direct their money. And this may be a new thing for you to hear about. And this is a very unique strategy, but it's a strategy that the richest Americans take advantage of.
And I was going to say, by self-directed, what we're talking about is you get out of the traditional tree investments, stocks, bonds, mutual funds, and get into all the investments that you can make that may fit your needs better.
So, Dennis and I were at an event this weekend. We had a client, just to give you an example, we had a client who had $200,000 with Fidelity. And this was a mutual client. They were interested in buying property from me because I'm a real estate guy. Dennis is a trustee. And so they wanted to buy a rental property from me. So they had a couple $100,000. The property was over only $100,000. Now the money was managed at Fidelity. They had $200,000 with Fidelity. Dennis sat down with them. They said to Dennis, "Hey, I'd like to take $100,000 from my existing IRA and set up a self-directed IRA because where it's currently at with Fidelity, they won't let me, as the trustee, own property inside of that IRA." So for $200, Dennis set up a self-directed IRA for them. That money will get transferred. It's not a withdrawal. There's no penalty. They're not paying the taxes. They're just transferring. They will now have two IRAs. They'll have their $100,000 left at Fidelity, which was where it originally was, and then they'll have a self-directed IRA that now can be used for alternative investments. And as you scroll down here on Dennis's homepage at iraclub.org, you can see some of those investments that are out there: real estate, lending, mobile home, other investment ideas. So there's a lot of things that investors never realize that their IRA can own. Now, when that client buys the money from me, so once the money, $100,000 transfers from Fidelity to the self-directed that Dennis has set up, then their IRA will actually go on title to the property. And then every month, my management company will send that rent not to the investor, because they don't own the property, the IRA owns the property. We'll send it to the trust account at the IRA Club in Chicago, and the rents will start building up as the profits in there. This is a passive strategy that most investors didn't even know they can do. And one of the things that we wanted to share with you today. Dennis, that was my K through 12 former high school teacher. What can you say to elaborate on that?
Well, what you said is excellent, and I will tell you the next step, and it's a step that you would also like to elaborate on, and that is, as that rent money comes in and builds up that IRA, very soon you'll find those rent dollars will buy you the second house. Your first house will have a friend, the second house, and every time you do that, we have more and more people who have started with one house and end up over a period of time, they make contributions to their IRA, they end up over a period of time with 5 or 6 houses in the IRA. Imagine yourself with 6 houses in an IRA, paying rent every month, and goes to the IRA, which isn't even paying income tax. Maybe if it's a Roth IRA, you'll never pay tax on that money. You can build a terrifically solid retirement with real estate in an IRA, not worry about stock market ups and downs.
Hey Dennis, Chavez came back with another question. So if you can cover your fee structure, because he asked how much to transfer from a 401k to a self-directed IRA.
The 401, the transfer is, we do the transfer for free. The IRA account costs $195 to set up. I will tell you, over the life of that account, it's going to save tens and tens and tens of thousands of dollars in taxes. I jokingly say the only people who ever ask us about fees are people who don't have an account. Once you start, you'll see the fee is so de minimis compared to the value of the savings or the size of the savings. No one ever asks about it again. But it's not. It is $200 or $195 to start the account, and then there's $175 a year membership. So, and that makes us always available. We're always there to answer your questions and take care of your transactions.
So then, in the case of that I was explaining earlier of my client, they'll pay an additional. What's the fee for each property that they have in their self-directed IRA per year, Dennis?
Every asset is $125 per asset, because There's filings that we do with the IRS. Want to make sure everything is tax compliant on your behalf, so you'll never have a compliance question or a compliance issue. Every asset is $125 a year except one, and that one asset that's more expensive is real estate. And that's only because we have to touch real estate so much more often. We have to pay, we'll be paying the property taxes on your behalf. The IRA will be paying maintenance costs on your behalf. The IRA will be paying all, insurance, probably have fire insurance on the house. It'll take care of all those things. So we touch a house far more often. So it's $165 per house. But after the fifth house, it goes down. It's just $165 for the first five, each of the first five houses, and then goes down. But again, the tax savings is in the tens of thousands. The $165 is not a deterrent.
Yeah, so think about the case of my client, that $100,000 when they had it over at Fidelity, they were paying $2,000 to $3,000 a year in fees and chargebacks for each $100,000. One of the things that investors notice is it's only $195 to set up your self-directed IRA, and then it's only a couple $100 a year to maintain it. And so one of the things that my real estate clients notice immediately is, man, now I'm making 7, 8, 9, 10, 15% a year from my real estate, something I wasn't doing before, and I'm only paying a couple $100 in fees per 100,000 versus a couple $1,000 before. And so there's huge savings for self-directed IRAs. So those of you that are passive investors, this may be an area to invest with that you never thought of. If you have a 401k from a previous job, that money is eligible to self-direct. A lot of you at your current job, you can't touch that 401k money until you leave the job. And we all know that money's self-directed because we've all seen the commercials for Merrill Lynch, for Fidelity, for those big companies that manage your money. And the one thing that people don't understand is Dennis is a trustee just like Fidelity. The difference is Fidelity as the trustee chooses to not be willing to oversee you investing in alternative investments like real estate, businesses, loaning money. Dennis as the trustee has the same FDIC insured bank account. He's willing to oversee that as the trustee. And so any transaction that you make with your self-directed IRA, he and his team will review it, make sure it's compliant with the requirement so that you don't make a mistake with your retirement money. Because one of the criticisms that people will say of self-directed IRAs is, well, you can screw it up and then the money gets disallowed and you owe taxes. And that's exactly why you use a trustee like the IRA Club. So I have many, many clients that buy property from me and invest with us who use self-directed IRA. So I wanted to introduce that. The website for Dennis and his company is iraclub.org. And I've mentioned my clients, I've mentioned investing. Let me explain a little bit more about what I do and how our organization is put together. So Dennis and I are the partners on Get Real Estate Education, and many of you found us from clicking on an ad that was on your Facebook. We put Get Real Estate Education out there because this conversation we just had for the last 10 to 15 minutes about self-directed IRA investing is a conversation that we've had over and over again. Every month, we get an investor that comes to us and says, I had no idea I could own real estate in my retirement account. Who knew? That's a new thing. And my organization, we sell properties, we sell deals to investors. But we don't just sell deals, we also manage those. So you can see from this slide that I have on the screen, this pie chart. I own Alpine Capital Solutions, which is the URL behind me. AlpineCapitalSolutions.com is our website if you're interested in that. And under that umbrella, I currently have 5 different operations around the United States. So our biggest operation is in Indianapolis. We have 1,600 properties that we manage for investors. We have an Alpine Property Management in Kansas City. We have one in Dallas. We have one in Idaho. We have one in Charlotte. So we're in 5 markets. I don't list Dallas on there because we're currently in sell mode in Dallas. We've been advising our investors to sell property in Dallas when tenants move out because we feel like Dallas is really kind of peaked. But we're 5 actively working in the other 5 markets. In each of those markets, we also have a construction company and we have a real estate brokerage. And so Dennis and Fred and I were all at a training that we had in Indianapolis this month for investors interested in passive investing. And at that training, they came to our offices in Indianapolis. They did their due diligence. They met their team. They met my partners from Kansas City, from Charlotte, from Idaho, and then they bought properties from us. I would say probably 80% of the investors who bought That's called turnkey investing. They bought a property that I have already purchased with my money. I've already rehabbed it and fixed it up and rented it out. And so probably 80% of my clients, and Dennis and I have about almost 1,000 mutual clients because we've been working together a very long time, are taking some of their retirement money and diversifying into some real estate with their IRA or 401k. And so the reason that we decided to put this education together for Get Real Estate Education is because we realize so many investors have never heard of this. They don't know it's available to them. And I want to show you a slide really quick of the wealthiest Americans. And it's called How the Wealthy Divided Up. And what this shows, and that you can see very clearly here, is that the wealthiest Americans are using, let me bring up my little highlighter here. They keep about a third of their money in real estate. They keep about a quarter of their money in businesses, 20% stock, 4% hedge funds, 9% fixed income. But my point is that many of you over the last 12 years have done extremely well in your 401k and IRA because the market's been going up. And many of you have 70, 80, 90, 95% of your money or 100% of your retirement money in the market. The last time the market crashed in 2008, investors lost on average, they lost a total of about $3 trillion in value watching 30, 40, 50, 60% of their 401k disappear with that crash. And the reason the wealthy Americans didn't is because many of them already had their money diversified. And so the investors that we worked with this past weekend in Indianapolis were looking to take some of those profits. Maybe you're up 40% over the last 10 years, 60%. Take some of your profits and use it to buy rental real estate. Let your 401k own some rental property, invest in real estate as a diversification for the next downturn. Now, go ahead, Dennis.
I was just about to say, many people come over, put some money, take money off the table at the stock market and put it in real estate because of the intrinsic stability of real estate. The stock market does go up, does go way down and way up, and your rent just keeps coming in. I have a property that I own with Aaron, and every now and then I'll be in the car and I'll be driving past that property and I'll call Aaron and say, you know what, it didn't go down in value today because the stock market goes up and down. So you really want to start stabilizing your return and your returns by putting something stable and growing and valuable and profitable like real estate in there as a very, very strong, good mix.
So Dennis's website is iraclub.org. I have two websites I want to share with you today. They're both on the screen behind me. AlpineCapitalSolutions.com I have up on your screen right now. This is our website for investors who are more focused and passive, who are interested in buying property for us. We've been selling property to investors and managing them for them on the back end until they'd like to sell them. We help them sell them when they're ready to get rid of it. We've been doing that business model for turnkey investing with investors for coming up on 10 years. And we manage 3,000 properties nationwide for investors that we've sold them to. So we've had a very long track record under the Alpine umbrella, and we actually do monthly training events at our biggest operation in Indianapolis. If you click on that link of live training events, you can see we have two more events this year, one in October, one in November. Dennis will be at that event. If you're interested in attending one of our trainings, there's no cost to attend. We don't charge. You simply have to have enough money that you can invest passively. We usually say about $100,000. If you have $100,000 in a 401k from a previous job, if you have $100,000 in an IRA, if you have $100,000 in savings or on a line of credit, we'd love to have a discussion with you about attending that training with us. Fred's email, Fred's going to throw it in the chat bar. It's fred@alpinecs. Fred is one of our business partners and is a point of contact for new investors. And if you're interested in seeing properties or learning more about our turnkey deals that we sell, we don't list them on our website. We don't put them on the market on MLS to sell. We only sell based on referral and relationships that we have one at a time. So that's our passive portal for investing. On the active income side, we're really excited about this training portal that we just put together this year. Fred, we'll let you put your email on there. I don't see that it's popped up. So Fred's email is Fred at alpinecs.com. YouTube won't let him throw it up there. Fred at alpinecs.com is the email that you want to use to get in touch with him. I'll have it on one of the slides later. But on the active side, for years we would meet investors and they would say, well, I don't have $100,000, so I can't work with you. And so this year during COVID, when the whole country was locked down, I started going through all of the topics that I've used to invest actively over the year, and I started recording classes for them. And you can see if you go to aaronadamstraining.com and if you click on real estate classes, I've already recorded 12 classes. We just recorded our 13th class on foreclosure properties this last month, and our goal is to continue recording, because what I've basically done is said I've been doing investing for over 20 years. I've bought over 10,000 properties. We have this huge $100 million a year real estate company. And there really isn't anything that I haven't tried or tested or done. We've built new construction. We've done apartment complexes. We're buying trailer parks. We've done single family homes. We've done raw land development, storage units, you name it. I've done it over the years. And so you can see the catalog of classes here, the categories on the right. And many of you and some of you maybe have paid for real estate education in the past. And there's a lot of seminar companies out there who are not real estate companies. They're seminar companies selling seminars, and they sell those classes for $3,000, $5,000, $7,000, $10,000. In fact, just out of curiosity, if you're listening to this and you paid more than $2,000 or $3,000 for real estate education, type the amount in the chat bar. I'd love to see some of those numbers that some of you have paid for classes. We had someone a couple weeks ago who'd spent $60,000 with a company selling the same classes that we offer, and you can see on our website for $99. And so we have our wholesale training. I was talking about wholesaling earlier as an active income strategy. It's $99. Flipping is a popular strategy, $99. Mobile homes, construction. So we've put those list of classes together. They're $99 a piece, and it's a product that we're excited about, because now we feel like no matter where you're at, if you're beginning and broke, or whether if you're a savvy investor who's done a lot of investing and maybe you're just interested in investing passively, we now have a solution for you. And so those are the three websites, and hopefully you understand a little bit better about what we do for investors. Now I want to talk for a few minutes about what's been happening nationally in real estate, what's happening because of COVID, because investors have been saying to me lately, is it a good time to get into real estate? Is it a good time to invest? Should I wait until the country gets normal? And my answer is no, absolutely not. Let me just give you one example. Let's say you wanted to do flips, and you lived in Indianapolis or you lived in Charlotte, one of our markets where I know the numbers exactly. Charlotte's a hot market, and typically if you look back over the last 10 years and you look at how many deals that are available on the market to sell, Charlotte has typically had about a 6-month supply of inventory on the market. That is, at the beginning of this year, that was down to 3 months pre-COVID, and during COVID it's dropped to only 1.5 months supply of inventory. Think about being a flipper where there's so few homes on the market that you throw your home on the market and you're getting multiple offers. Usually that happens to people in San Francisco or people in Manhattan, or it used to be people in Manhattan. And not the case anymore. Indianapolis is down to 1.5 months supply. Kansas City's down to 2 months supply. Flipping is an amazing strategy right now. Flipping is has gotten better because of COVID. Real estate agents are like, I was reading an article in New Jersey about real estate agents are having to put people on a waiting list to even go see properties, because so many people in Manhattan are looking to move out of Manhattan and move out into the suburbs where it's going to be a little more safe. And so COVID has created some new opportunities that didn't exist previously. Now, before COVID hit this year, if you go back to January and you look back at the last 6 years, home prices have been going up. We have 42% appreciation over the last 6 years. And the median home price in 2013 was $163,000. Median home price is now up to $231,000. But if you look at wages, in 2013, the average hourly wage was only $20 an hour. That's only gone up to $24. And so while home prices have been outpacing wages, you have an affordability crisis. Now, as a landlord, that's music to my ears, because that means the 3,000 properties that we're managing will have a waiting list for tenants. And we literally see 10, 15, 20 investors, 20 renters applying for every vacancy that we have. So coming into pre-COVID, we already had an affordability issue that was causing more people to be landlords. So there's really has never been a better time to be a landlord. Now, there are couple other factors that have impacted housing. Our millennials, our Gen Xers have been buying homes and becoming homeowners at a rate much slower than their parents. My generation, my children's generation, they want to own homes, but they just don't have the debt to income ratio. They're not making enough money. And so we're slowly becoming a nation of renters. Great for a landlord like me, great for my clients who I'm selling properties to, and great potentially for you as an investor who's in the game and can benefit from that. One of the main reasons is like we just mentioned, they're not making as much money as they need to be to afford the homes. But student loans is also affecting the debt to income ratio of many people who would like to be homeowners. We've never had this many student loans on this many people's credit, and it's really becoming a significant factor. Another factor is that construction has not been keeping up with the demand. The last time the market crashed in 2008, we had about 4 million homes too many. This time around, with everything related to COVID and coming into 2020, we're short 4 million homes, and that's rental property, and that's homes for homeowners to buy, and so we're kind of in an unprecedented territory because when the market crashed the last time in 2008, real estate was the fault. You had subprime mortgages. You had an overbuild of homes. We had built way too many homes for what we needed in this country. This time around, that's not the case. We're underbuilt. Builders have not been building over the last 12 years anywhere near enough homes for just to keep up with population growth and immigration that we have. And so we really need 1.7 million new housing units a year, single-family homes, condos, et and we're not getting that. And so not only for homeowners has that been a problem, but that's also been the case with rentals. And you can see from this chart that coming into January, there's been growth in the high-end rentals, over $1,000 a month. But when you look at $600 to $1,000 a month, there's a shortage of rentals. Great for a landlord, not so great for renters who are competing for rental properties. And vacancy rates have been at an all-time low coming into January. When the market was at its lowest back in 2009, 2010, the last time, vacancy rates were between 7 to almost 10%. And they've really dropped to where what we're seeing on the 3,000 properties that we manage is vacancy rates well below 6%. And so when people say to me, what's the impact of COVID? And somebody asked the question, where are you pulling the data from? If you go to Harvard Joint Center for Housing Studies, let me just bring that up really quick. It's one of the best macroeconomic think tanks that I know of for data on housing. If you go to research and click on that tab, you don't have to have a membership, you don't have to log in. There's the America's Rental Housing of 2020. Most of the statistics that I pulled, this came out in January of this year, and it talks about where we were nationally and by markets. But you can see this is a fantastic resource for macroeconomic research and data. I use it constantly. I'm in there constantly as kind of a starting point to see what markets that I like to be in. But the reality is, until we reopen and then normalize the country, we're not going to be in a position for to really kind of take advantage of what existed back in January. So everyone's kind of learning on the fly. I mean, who would have thought that everyone would be looking at alternative or bigger housing that can afford it, and then moving with such intensity and with such high volume of numbers? No one thought back in March when COVID was first coming out that we would have such a severe supply of homes drop on the market. And so no one knows how things are going to go going forward. I mean, I've heard people say, what happens if the stock market crashes when at the presidential election? What happens with third and fourth quarter earnings come out? Could the stock market crash? And so one of the reasons the wealthy are so diversified is because they're kind of planning for any scenario. They're kind of planning for any contingency. I want to show you, going back to 2006, what has happened to rents, whether you look at it as medium rents or average rents in the United States. And, in 2008, the markets crashed and investors lost $3 trillion, like I mentioned before, okay? And so you had home prices dropping 40%. You had 401k and IRA portfolios dropping 40, 50, 60%. But one of the reasons the wealthy keep a third of their net worth in rents is because you can see rents have just gone up from 2006 to 2017. And so rental income becomes one of your best hedges against a downturn. That's why so many of our investors are diversifying some of their retirement money and buying rental property. And so many of our investors are just using regular money. Maybe you got a huge bonus last year from your job and you're sitting on $100,000 wondering where I should put it. I'm nervous to put that in the market because what if the market crashes? We get that. We had investors who were freaking out in April when the market went through its volatility. And so we've never been busier in terms of working with investors on properties. And if you're getting started and you're like, I don't know how I'm going to get going on any of this, then that's why we put together the Aaron Adams training page. So that you, as a beginning investor who's active focused, or maybe you've done one strategy, maybe you did a flip, maybe you've owned a couple of rental properties, but you've always wondered about mobile home parks and why those are so hot, or you've wondered about commercial property. We put those classes, each class is just between 3 to 6 hours of length. And so what you as an investor can do, for example, let's say you say, I've wondered about Airbnb. Is COVID going to hurt Airbnb? What's going to happen going forward? You can sit down for $99. You can watch a 3-hour training on Airbnb and make a decision on if it's right for you and in your market. That's the vision that we had for Aaron Adams training. You're not spending $5,000, $10,000 on all these classes that you may not ever use. You may not make your money back. Fred, do we have, it looks like we got some additional questions.
We've got some chat going on there. We were just talking about when the next 3-day training is going to be. So with letting people know your next 3-day training in Indy is going to be 9 to 11 October. And then also for people that are asking if they're not able to get the updated links and they're looking for where we can watch this, they can go to the Alpine Capital Solutions training page and pull up all the previous live streams that you've done and recorded on there. So just letting people know where they can find that stuff.
All right, great. Dennis has got to leave here in a few minutes, and so we're very committed to starting and stopping on time. We have about 10 minutes left, and so I wanted to show you the package that we've put together for you today. And so after talking, we put together a $99 package, kind of a starter kit for you to get going, whether you're active or passive or both. And so I want to break that down for you today. We have a $99 introductory offer package that we've put together. It's any class of your choice at AaronAdamsTraining.com. So not just the class, but we'll also give you the PowerPoint slides. So normally we sell that for $200. It's a $1,000 value. That's included in your $99 price point. We're also going to have, Dennis Blitz is also willing for that $199 price to set up a self-directed IRA or self-directed 401k for you. That's a $200 value. And not only that, but Dennis and his team will do a 1-hour onboarding Q&A Zoom meeting that you can have access to so that you can get all of your questions answered about self-directed IRA investing with more time, because obviously we only have an hour today. We're going to add to that package as well for the $99 a one-on-one coaching session. I have a phenomenal network of investors around the country. I'm going to line up one of my real estate savvy investors to call you one-on-one and answer your personal questions. Maybe you're just getting started. Maybe you're struggling to pick a strategy. After you've had a chance to watch the trainings, you could get on the phone with that person and really kind of map out a game plan going forward. And then the final piece to our $99 introductory offer is this Saturday, I'm teaching a full 1-day training. I have a friend, his name is Toby Mathis. He's a partner in the Anderson Law Group out of Las Vegas. They have 400 employees working for them. They are tax and asset protection specialists. Toby's a savvy guy. He's got a group called Infinity Investing that they've put together. This Saturday, we have a full one-day investment training package. You can attend that absolutely free. So there's 4 components to this, and it's just $99. If you're interested in that, you can email Fred. Here's his email. It's fred@alpinecapitalsolutions.com. Use the word Kickstart to take advantage of the deal, and Fred will help map everything out for you. Somebody said, that's an awesome deal. That's our goal. Look, I'm doing $100 million a year in real estate. Dennis has hundreds of millions of dollars running through his trust account at the IRA Club. We're not seminar companies. We're not selling a bunch of books and tapes. Our employees are trust company employees, property managers, construction. We're using the real estate and the education as a way to meet you. That's why we put it together. That's why we spent money on Facebook, because we have fantastic products and we're trying to get the word out. So from the Aaron Adams training, as part of the package, you can watch the full training. Here's the list of classes that you have to choose from. There's an asset protection class. There's a commercial class. Beginning construction. Maybe you've wanted to get in real estate. You're intimidated by construction. I taught a 3-hour training with my 2 construction managers out of Indianapolis. We give you shortcuts and formulas. It's a fantastic class. Creative finance. One of the things that attracted me to real estate 20 years ago while I was teaching high school was this idea of no money down investing. And in our creative finance, we show you how to get deals no money down. We show you how to do lease options and wraps, and we go through all the strategies for that. Flipping. Everybody's interested in flipping. People watch the flipping shows. It's a sexy topic. I give you my formulas for flipping. I show you how I've done flipping over the past 20 years. You already have the IRA class. We've given you that for free. Marketing. We show you how to find deals for 60 cents on the dollar, how to send letters out, how to send postcards out, how to get investors to bring deals to you. Mobile home park. I've spent $10 million buying mobile home parks and setting up mobile home dealerships over the last 3 years. It's a hot growth area. I think it's the solution to the affordability crisis that we're having in this country, and I break that down for you. Airbnb. I have 30 Airbnbs in Indianapolis. When you come out for our training for the passive investing, we actually take you around to the Airbnbs that I own, and you're able to see that strategy. And then wholesale, which we mentioned earlier. So any one of those classes is included as part of this $99 introductory offer. Dennis is going to, once you sign up for the package, again, email Fred at alpinecapitalsolutions.com. Use the code Kickstart so he'll know that you benefit from this package, and Fred will get everything set up for you. You'll literally just go to Fred will give you instructions on how to pick out your class. He'll send you an email that explains how to get signed up with Dennis for the self-directed IRA training. Dennis and his team will send you an email letting you know when the Zoom orientation meeting is. You'll be able to get on there with a couple other investors. They'll explain to you the pros and cons of Roth self-directed IRAs, self-directed 401ks. They'll answer all your questions. And then when everything is said and done, for no additional money, they will set up a customized self-directed IRA for you. And so that's included as part of the package. The coaching session that I mentioned earlier will be whatever you want to talk about. It's not a call center in another country. It's not somebody who has never done real estate that's working off a script. We're talking about another investor who's ahead of you, who knows about real estate, who can help you map out a strategy and a game plan, whether you're just starting out, whether you're more savvy, and then plug you into the correct resources. And finally, the training this Saturday. We're going to cover the differences between rich and poor. It's a 6-hour training with Infinity Investing with my buddy Toby. I'll be teaching real estate. There's going to be other experts on there teaching. It's a great overview of wealth and how the wealthy in this country manage their money. And so your attendance in that, Fred will send you a registration for that as well. And so this is an opportunity for you to move forward. This is an opportunity for you to get $1,500 for $99. We've already given you a ton of free education. We gave you 2 classes from Aaron Adams training. Hopefully this has been valuable for you today. Tomorrow, my partner Travis Howard and I are going to be teaching only active investing strategies. We're going to have the same introductory offer available again tomorrow for the investors that attend that training. The focus today was kind of an overview of active and passive. The focus tomorrow is going to be active only. So if you're interested in active investing, we're going to be talking about some of the best strategies that we see out there for active investors. And then next Thursday, Dennis and I will be doing a passive only training. So maybe you don't want to spend $99, you want to be a lurker, that's fine too. Make sure that you watch the 2 trainings we already gave you. Watch the Real Estate 101 training, watch the IRA training that we sent, and feel free to continue joining us on these weekly live streams. Our goal is to establish credibility by giving you real knowledge, giving you real content, and not just try to do a bait and switch. And you can see for $99, you have very little exposure in terms of what you're able to get for this deal. So if you're interested in taking advantage of that, Fred will walk you through it. He'll send you an email breaking down everything that you need to do. Dennis, there's a great question on there. It says, is there a minimum amount suggested to fund in your IRA club account?
You know what? We have a lot of people who start with, there's $500 starts the account, but a lot of people start with $7,000 and up, because at about $7,000, we can start finding investments that work for you. But the up is really the key. So $7,000 is a good place to start. If you have maybe an old IRA or an old 401k, or you can contribute, because remember, you can make contributions to your IRA.
I met an investor a couple of years ago, and she was older, and she had spent $75,000 on a bunch of classes that after she took a couple, she said, I realized that these classes are all active and I'm just passive. I wish I would have had my $75,000 back so I could use it to buy a deal from you, right? Remember that, Dennis?
I remember, yes.
And so our goal is to help you map out a game plan. Maybe you've dabbled in active investing. Maybe you're looking to expand what you've already been doing. We have tools to help you with that. We're going to be recording additional trainings every month, mapping out some of the other, like storage units, tax liens. We're about to add the foreclosure class, which if that's the class you'd like, we just recorded the foreclosure class last Thursday with 2 business partners of mine, both experts in foreclosure investing. We talk about the 3 stages of foreclosure: pre-foreclosure, foreclosure auction on the courthouse steps, and then REO stage. We break down the pros and cons of those, and we help you map out exactly a strategy so that you can take advantage of foreclosure. Millions of Americans are in foreclosure right now. Another great class that it's not listed on the Aaron Adams training, but if you'd like that to be the class that you choose for your $99, we've recorded it, it's in the can, and we were in the process of adding it this week. So we'd be happy to let you choose that class as well. So we're really excited about this initiative. We both, Dennis and I, had a lot of downtime during COVID, and we used it to take advantage on things we've been talking about forever. We said, wouldn't it be cool if we created a way to meet investors or new investors organically and didn't try to gouge them thousands of dollars? Just hit them with a couple $100, let them decide if they want more. And so that's what we've put together, and we're excited that you've taken the time to join us today. Now, we do have a few minutes for some questions. If you'd like, feel free to type those into the chat bar, or just reach out to Fred today. Shoot him an email, fred@alpinecapitalsolutions.com. Hit him up with any question. He'll forward it to Dennis. He'll forward it to me, trying to keep it as simple as possible for you. Fred, is there anything else that I'm missing about all this? And then Dennis will get you one final word.
No, I think you covered it all. Bottom line, if there's any questions, if they just email me, fred@alpinecs.com, I'll be able to get them pointed in the right direction, either tie them into another expert or tie them back to you guys, or map out a pathway of getting money into a self-directed IRA or moving through the education pipeline.
Excellent.
Let me make a quick comment, because Aaron is a real estate guy. He's real estate down to the bone. I mean, he's done all the things he's talked about. I've known him for many, many years, and no one knows more about buying property, rehabbing property, renting it profitably, selling it profitably than Aaron. But I want to talk about myself for 2 seconds, because I'm really an investor guy. I'm not a real estate guy. Aaron's the real estate guy. And investor guys all know something. The older the investor guy is, the more he knows it. The way to make money in investing is look around you, find out where the population is heading, and then run like hell to get ahead of it, right? and act like you've been there all along, right? Politicians have been doing that for years, right? We say, oh, climate change bothers me. Every politician suddenly runs out ahead and says, oh, I've been talking about climate change for 20 years. Well, they haven't, but they say it. So we're going to talk about what investors do. Investors really want to get ahead of the curve. And the curve is very, very clear right now. We have something we've never had before. We have the two largest groups of population about to move, about to get a new home. Baby boomers, there's 72 million of them. They are ages 56 to 74. They're all rethinking where they live. They're all rethinking their housing needs, and they're all going to be moving in the next maybe 10, 15 years. And the Gen Xers, the millennials. The millennials are all 25 to 36, 37, and they're all in that perfect house buying time, house renting time. Again, they're changing needs. They're going to change where they live. We literally have 140 million Americans who are going to change where they live in the next 15 years. And who's going to be the king? The king is the person who owns the residential real estate.
Great point, Dennis. Thank you so much for adding that. We're out of time. It's been an hour. We appreciate you joining us. This training will stay on the Alpine Capital Solutions YouTube channel that you found it. It's going to be a public link. Feel free to share this. Feel free to maybe to forward it to someone who might benefit from it, might be interested in it. We leave it public for a reason. Maybe circle back on it. You'll see some of our other trainings are there as well. Feel free to dig into those. There's no cost, no obligation for any of what we offer. Thank you for joining us. We look forward to having you with us at future events. And if you'd like, email Fred, and he can give you the link for tomorrow's active training. Love to have you circle back and join us for that again tomorrow. Thanks for your time to interact with us directly very soon.
Bye.